Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum, where all voices matter. I'm pleased to welcome back Tom Caldwell, the chairman of Caldwell Securities in Toronto. Tom is a regular visitor commenting on the economic news of the day. Welcome back, sir.
Thank you very much, Tony.
I guess the first thing is a few days old now, but obviously let's discuss the Bank of Canada's decision to hike the rates and to pause. Good move, bad move? What's your take on it?
Well, remember, monetary policy, particularly interest rates, you're trying to hit a moving target out there someplace, 12 months, 18 months out. And I think most of the people in the market participants, bond traders, et cetera, and I'm a has-been bond trader, we got the feeling we were reaching the end of these increases, that they were going to pause at some level. It might be another quarter or 25 basis points, but to wait to see whether the rate increases beforehand or just to happen are starting to bite in. You're starting to see some interesting things. So inflation is coming down a little bit. So that's encouraging. So I think they're sort of pausing. How's it going to work out from here? Do I need to do more? They may well have to do a couple of little ones, but I think we're near the end of that cycle.
And yes, and so from your perspective, then having a pause is good for the Canadian economy, and that shows that we're making progress?
Well, I think it's a good thing. Interest rates eventually can choke off everything. If you go back to Paul Volcker and 18% interest rates, literally everything kind of stopped. So I think that's always an anxiety factor for markets. I think the feeling that we're sort of pausing, let's see how it's working, let's see how the economy is behaving, is a positive thing. Yes.
And then we saw almost the same time the U.S. Federal Reserve also rose its rates, but didn't, unless I'm mistaken, announce a pause. So is that a good or bad thing from your perspective?
Well, the central bankers, particularly in North America, are talking tough, probably tougher than they're going to act. Powell at the Federal Reserve Board is talking tougher. When I was a young student, we used to talk about central bank policy and moral suasion being one of their tools. Well, what they're doing is they're trying to jawbone the market into slowing down a bit. But like it or not, inflation has been, and ever shall be a permanent fact of life. Whether it's at 2% or 8%, it's always going to be there.
Indeed. And so going along with this, we also had some other numbers that came out in the last few days, particularly on economic growth rates. The U.S. announced a fourth quarter 2.9% growth rate. Does that mean that there's less of a chance of a U.S. recession, or is that a dead cat bounce, or did you have any thoughts on that?
Monthly, quarterly numbers really don't mean a great deal. But I think the sense is, if you look at earnings coming in, the first earnings toward the end of last year that are now getting released, they're actually beating expectations. So if you take a look at the world today versus, say, 3 or 4 weeks ago, you're seeing less concern about inflation, less concern about interest rates, and less concern about a recession. People are just calming down a tiny bit. Now, markets are still wobbling, but it's like throwing a pebble into a lake. You do have that ripple effect for a bit. But I think everybody's being a bit more positive looking into the future. And I think there's grounds for that too.
Yeah, I think, well, you've been pretty consistent, Tom, I have to say. You haven't been on the side of talking us into a recession. You've been a bit more optimistic than that, but it seems like your optimism is well founded at this point, right?
The basis of my optimism is that I have discovered that optimists are richer than pessimists. And I've tried to stick with that policy.
Yeah, that's not a bad thing to consider at this point. Let's talk about Canada, back in Canada again. Obviously, we were looking at the growth rates in Canada while we were looking at the U.S. growth rates. That's obviously a pastime for Canadians, is always to compare U.S. On everything, including growth rates, the economy, politics, you name it. And there was a 1.6% growth factor rate for fourth quarter for Canada. I guess I'd love to. We're going to take a brief break and then get your point of view on whether that is grounds for worrying about a slowdown, or again, let's not hit the panic button yet. Tom, we'll get your point of view on this after the break. Please stay with us. We'll be right back.